Hello everyone and welcome to today's cryptocurrencies update for February 23, 2022. A change of guard or switch of the guard and a very bullish Elliott wave option. Let's go check this out, shall we? So this update is going to be brief and short. So I'll let you go as soon as I can. Remember, here is Ethereum and Ethereum still bottoming here in this ideal wave B target zone. So let's see how this is going to develop over the next few days. Resistance is at 27.50. How high did we get? 27.55. This is loud and clear. Obviously, we need to get above resistance so we can get to 30.65. The rally over the last couple of hours since yesterday, I guess low, is not convincing yet. We need to get above 27.50. If we get above 27.50, we can target 30.65. If we get above 31.90, green arrow, I am all for this option. All right, that's all there is to it. Otherwise, we can still move lower because support is now at 23.15. Can we define another support level, maybe something intermediate? Let's have a look. If we can find something here, I would say probably somewhere around here. Okay, so this is 25.05. This is also support, 25.05. So if we go below 25.05, we can visit 23.15. Clearly, this is strong support, as you can see, all these levels, right? Of course, a little bit whipsawing around it, but that's fine. Once we broke above it here, it was off to the races. So we'll have to watch the 25.05 level. If we break below it, 23.15. What is below 23.15? Let's have a look here. We are probably going to target somewhere around this level. I would say 20.55. So we have to keep a good eye on all these support levels. Resistance needs to go to the upside, otherwise we are going down. Very simple. Very, very simple. Okay, so hopefully we can save those changes. No, it didn't. Thank you very much. That is the name of the game these days. Anyway, here we go with Bitcoin. Bitcoin went a little bit lower than the ideal bottoming target zone for this wave B. But as I already outlined in the February update, because we have 3 waves higher for wave A, this wave B does not have to bottom here. It can actually go all the way down to the June, July lows for what was called a irregular flat B wave, right? So this is black B of blue B. Blue B is made up of 3 waves, A, B, and C in black. Always remember, B waves is always 3 waves, A, B, and C. Major A, major B, major C make up primary B. Doesn't get much simpler. And of course, major B is made up of 3 intermediate waves, A, B, and C in red. Just like we have here, wave A in black, made up of wave A, B, and C in red. These are these smaller and smaller waves. This is the subdividing part of Elliott wave. Just like this wave A here in December was made up of, in my humble opinion, 5 waves. So this is still the preferred wave count. And we'll have to see where this wave B is going to bottom. This is still the preferred wave count, A, B, C. I know it's taking its sweet time, but I'm pretty sure the market doesn't want to let anybody in before it's going to take off. That wouldn't surprise me. The other option remains that we have put in I'm going to clean up the chart a little bit here. There, this gone, this gone, this gone. So we are in this wave 3. Okay. Wave 3. We topped for wave 4. And we're now in wave 5. Okay, and this could then be wave A, then we get wave B, and then we get wave C to complete cycle 4. Okay, this is still very possible. It's not my preferred view, as I view it preferably as all threes, up and down, up and down. That is a little bit more a better characteristic, I would say, of a larger corrective price pattern, but it doesn't have to be this way. So we have to be very cognizant, and this just shows you how volatile, or so to say, corrective price actions are. They are the hardest to track and the hardest to forecast of all. You can say, oh, that's an easy excuse. No, it's just based on experience. So that's just what we have to deal with. And we have to interpret the price action as we go along. We make these assumptions, the anticipation, we monitor it, and then we adjust accordingly. So we have two options. So we really need to see this materialize quite quickly. If we start breaking lower, then this option is very, very valid. Again, we're stalling here at 40,000. 40,000 is now resistance. We broke above it, failed breakout. I would say honestly, again, that's quite classic hallmark of a bear market, where upside disappoints and the downside surprises. So please keep that in mind. I will put it on the summary slide as well, if I can remember it to the very end. Now, if we get 5 waves lower, this opens another door, okay? And there's always, once you get one pattern completed, it closes one and it opens another one. This is always the case, right? We always have at least 2 options. That is that we are in a very large cycle 4 already, okay? That the top in November wasn't cycle 3, as I have here, but that the top in April was cycle 3. Then we had 3 waves lower for wave A, 3 waves higher for wave B, and now in 5 waves lower for wave C. For all of you who follow my education section on the website that I have here, you then know that is a flat. That would be a simple flat correction. Allow me to scroll down there. This is then what we call a flat correction. I have it here labeled as 1 and 2, but it is of course also valid for 3 and 4, as long as it's a flat correction. So then we have pretty much what we call a irregular flat, because the B wave went above the start of the A wave, or in this case, the top of the cycle 3 wave. I'm not too sold too much on this price action, because the rally here was, in my humble opinion, more clearly 3 waves, just like this decline here was 3 waves. But okay, 3 waves up is not really a 5th wave. That is more of a B wave, because B waves are. And then the decline here was better counted as 5 waves. So this is not my preferred view. So that is why, if I zoom out here a little bit, let's see if I can capture it. That is why I prefer the, oh, it's not really on this chart, but this is A, this is then B, and then this is C. Okay, I think I have it better on Ethereum. So this is 3, this is 4, and that is then larger 3. Okay, so that is why I prefer the cycle 3 here. Okay, and not here, because this is 3 waves lower, that's corrective, but it's also 3 waves higher, which is also corrective. So this, in my humble opinion, is a flat. So this is why I believe this is primary 3, primary 4, primary 5. But again, this looks kind of 3 waves too. If anything, 1, 2, 3, 4, 5, 6, 7, which also looks kind of corrective. So this is a very arbitrary, arguably hard to interpret price action ever since the top here in March last year. But if we get 5 waves lower, we have to be cognizant of the potential that maybe cycle 4 already completed, took about a year, it's enough, as a flat. Cycle 2 was a zigzag. So if cycle 4 then alternates, it's a triangle or a zigzag, then this is, or a flat, then this is the flat, because it's not a triangular pattern. This is more of a flat. It's an irregular flat, and then we don't know if it's going to be a running flat, a regular flat, or a expanded flat. That I don't know. I can't tell you that just yet. from the looks of it, it would become a regular flat. It would revisit the June, July lows, okay? So we'll have to be now very open-minded to this severe possibility. So that brings us then either completion of cycle 4 and we're going to go to new all-time highs, or we have this option where we complete wave 5, we get a bounce and then lower. Again, why didn't this get saved there? Okay. Both are then looking higher. If we can get lower prices, we have a bounce from about 30,000 to about, I would say, 50,000. So that is a very good long trade as well. Or we're even going to get all-time highs. So how are you going to know the difference and how are you going to trade this? Very simple. Raise your stops and be patient, dip your toes in the water. Okay, so this is a pretty much, I think, a very good solution to the price action we're seeing. The preferred path remains based on where we are currently of a B wave, which can go lower, and then C for the larger B wave and then lower. This path I've tracked for weeks now. So far it is still transpiring. I was wondering if we would get 5 waves up. We only got 3 waves up. And now it seems like we get 3 waves lower. And then we should see probably another C wave of potentially 5 or 3 waves. It can be a 3-3-5. That's not unheard of. Same here. Can we get this? It's very possible. If not, we have to entertain the option that we're going to get 5 waves lower. Okay, so we have these 2 options. So either we're going to rally or we're going to drop. I know it sounds stupid, like, well, it can go up or down. Yes, that's where we are. And right now it's pointing down. This is where we are. This is, I said, you have to recognize the market environment we're in. I've said it over. So this is a corrective market environment, and they're the hardest to interpret for any analyst on what the exact direction is. Look at the simple moving averages charts. I haven't pulled it up, but everything is pointing down and bearish setup. So I think the preferred view is now down. If we then get 5 waves lower, that opens 2 other doors. So we have door A and door B. If we go through door B, which is 5 waves lower, then we have 2 options, right? One door, we go through one door, then 2 other doors open. One closes, then 2 next doors open. You either get the bounce to about 50,000, or we're going to get the new rally to new all-time high. It's a huge difference, but both will look higher over the intermediate term. And then eventually the market can decide what's going to happen shorter term. Again, I'm not too sold yet on this cycle 4 wave because of the price action here in March and April, as well as the price action here in May and June, which counts better as 5 waves lower in my humble opinion. And I don't like this too much as an impulse lower as well, but if it is, then so be it. We'll deal with it when we get there. It's just not my preferred view. There are some impulsive structures here in the price action. I can see those 5 waves, 1, 2, 3, 4, 5. I can see that. It just doesn't look too clean. So please keep that in mind. Okay, so that is a lot of digesting going on here, where exactly we are in all these small to intermediate to bigger pictures. That said, I'm going to start to cover Terra, also known as Luna. I have enough price data available to make this into a nice Elliott wave count and assess where it is in its price pattern. Looks pretty good. I haven't added the labels yet, but thank you for those with all your feedback. And this is going to be replacing Cardano. I'm going to drop Cardano and cover it much less. Why? Because Cardano is a vaporware. I've heard from others as well as read on the web. And Vaporware is simply where it's been promised as software, but it never materializes. So it's just kind of like smoke and mirrors, right? Literally. The next one to cover will be Avalanche, AVAX. I think it's a very nice one. It is a very good competitor to Cardano and Solano, and might be the next big thing. The next one here is MATIC. I already have a wave count for this one. So this looks pretty good as well. We have to track it carefully, and we'll bring a Ripple back on the table as well. It has some potential payment processing wise compared to Visa and all those things, it's actually larger, I believe. Quite interesting. So we'll have to track that one. I'm going to zoom out on these ones initially first, bigger picture wise, and then I will drop or cover less often GBTC and ETHE, the Grayscale trusts. Why? Because they've essentially track Bitcoin and Ethereum, not really one-to-one, but if Bitcoin is in a bull, GBTC is in a bull, etc. So one can really do then a one-to-one comparison. There will be some cases of missing waves because these grayscales trade only on regular market hours, whereas of course the cryptocurrencies trade 24/7. So that's always going to be the case. And once in a while, I can revisit them, do a little bit of a bigger picture assessment. I will also less frequently address Mara and Riot. Why? These are blockchain companies. And honestly, this is a crypto trading service and not a blockchain trading service. So I want to go back to the basics and leave those where they are. If you have any special interest in them, please let me know. Again, I'll track them a little bit on a bigger picture wise, maybe once a month or something like that. But it's time to start focusing on the next big thing in crypto world, which I believe are Luna, MATIC, and Avalanche. So let's focus on those. All right, we got to always adjust. We anticipate, we monitor, we adjust. Okay, so we're just, and now we have these ones that are top of the food chain. So I will drop Cardano, GBTC, Ethereum, Mara, and Riot. Why? As I said, Cardano is a vaporware. What is a vaporware? It's a product, typically computer software. It's announced to the general public. It's late, or it will actually never be manufactured nor officially canceled. It's just ghost. So not going to do it, right? We're not going to deal with something that is fictional. It was overpromised and underdelivered. GBTC, ETHE follow Bitcoin and Ethereum, so we can follow those two instead. Mara and Riot are blockchain companies with the focus of the services on cryptocurrencies. It is called crypto trading for a reason. Back to the basics. I will cover Terra, also known as Luna, Polygon, also known as MATIC, Avalanche, also known as AVAX, and of course Ripple, known as XRP, again, because that has been on the radar. And lastly, it could be possible that Bitcoin and Ethereum are completing a 5 waves, wave C of cycle 4. That is the other door that I'm tracking, okay? First door is that we are in a B wave bounce, which is going to be tricky. And we are completing the B wave of the B wave bounce, because B waves are made up of 3 waves, A, B, and C. And again, this B wave of the B wave is made up of 3 waves. So this is why we're currently in this utterly complex price pattern, as we are trying to narrow down the 3 waves of the 3 waves of the 3 waves. It is insanely difficult. So honestly, the best advice I can give is stay out. When in doubt, stay out. If we're going to get 5 waves lower, it could be that it is an initial move lower from cycle 3 top made in November, or it is the completion of this larger wave C of an even larger cycle 4, and we're going to go to all-time highs. Both the subsequent B wave bounce or the rally for cycle 5 will get us much higher prices, so we'll make sure we get on the right side of the trade. So that's what we're currently tracking, 5 waves lower versus 3 waves lower from the all-time highs for Bitcoin and Ethereum. Get 5 waves lower, that opens the door to either a reasonably 50% retrace bounce for wave B, and then a C wave lower, or we're going to start a new large cycle 5 bull market. Those are the options we're tracking. We anticipate, we monitor, and we adjust. And in that way, we'll never get caught on the wrong side, and there will be no surprises because we've covered our bases. But the bottom line is, as I said on Monday's update, this is corrective price action. Yuck. So please be aware of it. It's going to be tricky for the time being. Okay, that's going to be very tricky. It will resolve itself. Patience is the name of the game, and we'll eventually get it all resolved if we get either breakdowns or breakouts. Very, very simple. For now, it's still a little bit up in the air which exact options we're doing. We're tracking it every single day, so we'll get the answer soon enough. And with that, again, thank you so much for everybody who chipped in on the tips for what to cover. Most of you were aligned, so that's great. And I look forward to start covering those new tickers. Take care, trade safe. See you all on Friday. Bye.